Yo, what's the dealio, man? Listen, in this video, you know I got a banger for you, all right? We're gonna be talking about identifying gaps, the different types of gaps that there are, and how to be able to see these things on the chart and be able to be efficient with it, all right? Now, let me say this real quick. This is how I know I mess with y'all. I just spent an hour and a half playing around with my microphone and my computer because something was going on with the audio. I recorded the whole video, right? And then audio was messed up. All right. So listen, I'm committed to coming to you guys every single day. All right. So with that being said, we're going to talk about identifying gaps. All right. Identifying gaps and the different type of gaps. So there are 4 gaps. All right. We're going to go through them all and I'm going to show you examples on the chart. So be sure to watch this video in its entirety, like you should watch all the videos in its entirety, because there's always gems for you guys. All right. So we are going to pull these up. I got some definitions for you, so that way I can show you the actual examples in real life. All right. So be sure to like this video, subscribe to this YouTube channel, and we're going to get into it. All right. So you have 4 type of gaps. All right. Now let's go to the first one. As you can see right here, you have common gaps. All right. A common gap these are typically small and frequent gaps that occur without a clear trend or event and are often seen in stocks with low liquidity. They generally don't signify much and are often filled. All right. The gap is closed by price movement quickly. Now, the one thing I will say about this is common gaps they happen with stocks that are liquid as well. All right. So you can have a stock that has tight spreads, it's liquid, and it'll still have a common gap. All right. So if you don't know as well, a gap is if I'm a stock, right, and today I close at $100 and tomorrow I open up at $105, I gapped up $5, right? If I close at $100 and I open at $95, I gap down $5. Okay, so it's a gap up and a gap down, right? So it's the disparity between where did the stock close at yesterday and where did it open at today? Where did it open at today? All right. So it's a gap up or a gap down. So that's what we're talking about when we say gaps. All right. And we got these common gaps. So let's go to the charts and let's go find a gap. Let's go find a gap. All right. So let's go look. So let's just go to XYZ, for example. All right. So we got on the daily time frame, right? Let me clean up this chart real quick. On the daily time frame, we have this right here. So we got, all right. So this right here would be a common gap, so to speak. All right. So look, the stock opened up, it closed right here at $70 and it opened up at $72, right? And then it came down to fill the gap and then it bounced up and it went to the upside. All right, so that's a common gap. Common gaps happen every single day, right? Look at this one. It closed right here at 66. The next day, it opened up at 66.63. Right? So, it closed at 65.98 and it opened up at 66.46, right? Super small gap, right? But it happens every single day. All right. So those little small gaps, they get filled. All right. Now let's go to the next one. All right. So what I'm going to do is I'm going to break down all 3 and then we're going to go over each one. Okay. So, or I might just do it one by one. So the next gap is called a breakaway gap. All right. So these are gaps that occur when a stock breaks out of a trading range, a period of consolidation, and signals the beginning of a new trend. Then they typically happen with the strong price movements and high trading volume, suggesting a strong commitment from buyers or sellers. All right. So that's a breakaway gap. So it's basically starting a uptrend. You get what I'm saying? After it's been consolidated. So let's just go look for the breakaway gaps real quick. I got a couple examples. So let's go to MU. All right, look at MU. If you look at the daily time frame right here, okay, so it had a drop and then it consolidated around here for what, almost a month. All right, just been going in this little range right here, okay, and then we have a gap right here. All right, this gap right here, it gapped up and it never came back down, and it went to the upside and it started this uptrend right here, okay? So it started this trend and went from $70 all the way up to $86, all right? So that is a breakaway gap, right? So it started this uptrend right here, okay? So that would be a breakaway gap. Now let's go to, I'll show you guys Microsoft in a minute, all right? But we'll do MU first, all right? So this is a breakaway gap right here. So the next type of gap that we have is gonna be a continuation gap. Now a continuation gap says, also known as runaway gaps, these occur within an established trend. Established trend. They suggest that the trend is likely to continue as more buyers or sellers are jumping in, according to Investopedia. All right. Like breakaway gaps, they often happen with high volume and strong price movement. All right. So continuation gaps. So look at this right here. And we made some money around this time. I remember we was swinging MU. We was trading MU heavy over here. All right. So look at this. So it was in an uptrend. So this is already an established trend right here. And then it gapped up, right? So it gapped up from $86 all the way to $92. All right. So that is a continuation gap. So it was an uptrend, it continued, and then look what it did after. All right, hold on one second. Look what it did after. It ran all the way up to 130. Okay. And then look, now it's at 10, 110, 109. All right. So that is a continuation gap right there. So it's in the middle of this uptrend, boom, and then it stayed around here, and then it blasted off. All right. So that is a continuation gap. And then the last type of gap we have is an exhaustion gap. All right. These gaps appear at the end of a trend and signal a potential reversal. They often occur on lower volume and are followed by a significant price move in the opposite direction. They suggest that the previous trend is losing momentum and is likely to end. All right. So then so there's not a real exhaustion gap with MU. Okay. Now what actually, this was earnings. Okay. This was their earnings right here, this day right here. So it doesn't show that it gapped up, but it did, because look, it came up, right? So it closed at 127, it opened at 129, and then it came down. All right. And it closed below where it opened at, right? And then it never got back up there. It tried to, and then it came lower, right? So now now we're in a downtrend. Okay. So this was the exhaustion gap up here. And then, so what we may do is 16. You may look at this right here as a continuation gap to the downside. It closed right here at 116. It gapped down, and then it came down to 113, right? And now we're coming down, right? So that would be an exhaustion gap, right? Gapped up right here, sharp decline, and then it came down. All right. So now let's go to Microsoft, and let me show you guys what Microsoft looks like. Right? So check this out. So we're going to go to Microsoft. Where are we at? All right, cool. Microsoft right here, right? So this is a gap right here, okay? So look, so we talked about common gaps, breakaway gaps, continuation gaps, and then exhaustion gaps, right? So look at this. So now when we zoom out on Microsoft, we can see it clearly. This is a breakaway gap, okay? So it was consolidating here, had a little double bottom, and then breakaway gap, it gapped up, and then it started the uptrend, boom, right? So it took it from here. It took it from here to here, all right? And then what happened is we had a continuation gap. This was earnings. This was their last quarter earnings, all right? So it gapped up. This is a continuation gap, and then it created a further uptrend, boom, right? And now look, it gapped up again, but then it had a sharp decline. This is called an exhaustion gap. And now, as you can see, this means that Microsoft is ready to come down now. All right, because we're halfway inside of the gap. Immediately came up, boom, sold off. All right, it's exhausted. So now it's time for Microsoft to take a break. So you may see a stock gap up, but you got to look at the full chart, right, to see where things are at in relevance. All right, because this could be in the middle of the uptrend, and you can see, okay, we're in the middle of an uptrend, so this got to be a continuation gap. So we got more of a uptrend to go before we start riding a stock to the downside. You get what I'm saying? So you got breakaway gaps that's starting the uptrend. Then you got a continuation gap, right? That's a further uptrend. And then you got the exhaustion gap that represents the end of the uptrend. And so looks like Microsoft here. So you got this right here. This is a great example on Microsoft, the breakaway gap, the continuation gap, and the exhaustion gap. And then you have, you go to MU, right? And it's the same exact thing, right? We got the breakaway gap here, uptrend, continuation gap, boom, boom. And then it went higher. And now we got exhaustion gap up here. And then it never came up higher. And it's just been riding down ever since. All right. So those are gaps. That's how you identify gaps. But that's also how you understand where a stock is at in its trend. And as you trade more, you're going to get more and more versed in this, and you're going to get more comfortable, and it's going to start making more sense, right? But what I want you to do is I want you to understand the name of the game that we're playing, all right? And always remember that you got to stay sharp and you got to stay in your studies, and you can never know too much about the stock market and trading. Every single day I'm learning, right? Every single day I'm getting better at something, right? So I hope that helped, and I hope that made sense for you guys, all right? If you're not, please consider joining the Discord, right? Be there tomorrow morning. We are going to make some money, all right? We're going to make some big money. It's Friday tomorrow, all right? So like I always say it with me. Make sure you get up out of your head and go get into this world, because your head is a dangerous place to live, all right? And also remember, the more you study, the less you worry, all right? I appreciate you guys' time. I'm going to holler at you guys tomorrow on the next video. Peace.